Grade 12 student, today I want to simplify VAT control account so that when you write your test for term 3 or when you write your trial examination or final examination, you will be able to calculate this simple and straightforward. Okay, so when we talk about a VAT control account, guys, just remember that number one, understand what is VAT. We all know that VAT is value added tax, and this is the cash that collected by SARS or by government through the product or service that business are selling. Okay, so the first thing that you need to understand, guys, number one, you have to understand what is VAT input. You also have to understand what is VAT output. Okay, and you also have to understand the condition where you have to claim VAT input and where we have to record VAT output. I'm going to explain that into detail. Okay, guys, let's start with VAT input. What is VAT input? This is the VAT that us as a business we claim from SARS because we have spent some money or we incurred some loss. Okay, this is the claim by business from SARS. So in other words, because we are the one who are benefiting, this is going to be regarded as an asset. This is going to be an asset. So in any situation, for example, a purchase or a loss occurred, or in any case where business face no benefit. If you read transaction, guys, this is going to be keywords that we are going to use. If in any case you find that the business didn't benefit anything, this is going to be regarded as a VAT input. So VAT output, guys, this is the cash that we have collected because we have received something as a business. This is happen when business received money or the business has benefited. So in other words, guys, the difference between these two is that input, business didn't benefit anything. Output, business has benefit. If you benefited something, guys, of course you must give SARS 15%. That's what the rules say. Okay, so we all know that VAT is 15%. We can't just discuss that. Okay, now we have done explaining the difference between these two. Because here we benefit and we have to give SARS some cash, this is going to be liability, guys. Why liability? Because if you benefit, you must pay SARS. If you didn't benefit, you must claim from SARS and they must give you some credit. Okay, now let's check the question paper that we have. Maybe before that, guys, VAT control account is more like a T account. It has a debit side and it also have a credit side like this. So what happened here, guys, is that input are recorded this side of debit, output are recorded this side. In other words, this side is when SARS owe us. It's when SARS owe us. Here we owe SARS. Very simple. Okay, now let's check our question. Number A, they said the balance due to SARS on 1 April is 9,450. In other words, we owe SARS, which means that if we owe SARS, is this side of liability. The balance that we owe them at the beginning, guys, it was amount of 9,450. Now we are going to number B, the main information. Okay, on the main information, guys, what you need to know is that we are given 3 columns usually. They give you inclusive, VAT column, and exclusive. The only column that we are looking for, guys, is a VAT amount. Okay, the middle column. Okay, let's check transaction. There is a total sales. If they said total sales, which means that we benefited because we sold and we received something, whether it's cash or credit, it doesn't matter. We sold, we benefit because customer is going to give us money. Okay, because we benefited, this is going to be output. So which means that we are going to record this side. So how much are we going to record? VAT amount is not given, but because they give us inclusive and exclusive, it's going to be simple. It's either you take amount of exclusive, you say 512 sales. You say it's 412,000 multiplied by 15 over 100. You said over 100 because it's exclusive. Then it's gonna give you an amount of 61,800. Okay. Then the next one, a purchase. Because we purchase, our money goes out. We didn't receive any money, which means that SARS is the one that must give us a claim. Okay, we have to claim. So which means that it's gonna come this side, a purchase. Whether it's cash or credit, it doesn't matter. So it's gonna be let's see your calculation. 230 multiplied by 15. We are looking for 15 always. 15 over 100. But if it was inclusive, you were going to say divide by 115. Okay, then it's gonna give you here I need to use calculator, guys, to be sure. 230,000 multiplied by 15 over 100, and it's gonna give you 34,500. 34,500. Okay, then the next one, discount allowed to data. If they say the discount allowed to data, we give a discount to our data, which means that we didn't benefit because that discount amount, we didn't receive it. If there is no benefit, it's input. We didn't receive the money because we give discount. It's more like you are giving it away without getting anything. No benefit on that. Okay, so which means that it's input and VAT amount was given. Discount allowed is gonna be 1890. Okay, and then the other one, goods returned by the customer. If customer return goods, guys, we are not going to benefit anything because we must give back the money. So which means that nothing is we are going to benefit in this case. Okay, goods return. Goods return. The VAT amount was not given, we must calculate. They give us inclusive in this case, which means that we must say 15 over 115, not 100 because it's inclusive. Okay, then it's gonna give us amount of 2,520. 2,520. Okay, bad debt recovered. Because we recovered money and we receive it, we benefited. It must come this side. Bad debt recovered 114. Very simple. Okay, drawings of trading stock by the owner. The owner withdraw the stock. Guys, listen very carefully on this one. Remember, this stock that was withdrawn by the owner, it was never sold to customer. So in other words, this is the amount that we claim from SARS when we purchase, okay, from that stock. But the reason why SARS allow us to claim is because they know that at the end of the day, we are going to sell it and they're going to benefit. But because we never sold it, but the owner withdraw it, which means that we must reverse the claim by doing what? By recording it under output. The owner has benefited, so he must pay to SARS. He must pay what he has claimed before. Okay, drawings, there is a benefit by the owner, 138. Okay, then after that, guys, you need to check which side is higher. Obviously, the higher side is this one, which means that this is going to be payables. Okay, if you take everything here minus this, it's gonna give you guys the difference of 34,860. Guys, if output is more than input, if liability are more than asset, that means that it's liability. If more asset, which means that it's an asset. Whatever that is higher, that's the correct answer. When it's liability, is payable. When it's asset, it's a receivable. Simple as that, guys. Please, those who want to join our online class, guys, just come in time. We are starting immediately. We are not closing. We are already started with term 3. After that, we are going back and revise everything so that you guys, you can be prepared for your trial examination. So online class is still only 100 rand per subject. If you want to attend math literacy, mathematics, economics, business studies, we offer them as well from grade 8 up to grade 12. Tell others to come and join as well. I'm gonna see you on the next one. Also, guys, check our YouTube channel. We have a lot of lessons like this, Accounting Solution SA. See you on the next one.